Good to see you as well, Kelly.
What's the overall message this month?
Yeah, I think if we look at the theme, I would say that if 22 was about hiring at all cost, 23 is about right sizing and retention. And that's really what we're seeing. We're seeing companies that overhired in 22, and we talked about that on your show, your segment as well, are now right sizing the supply chain of labor and really focusing on retaining those employees. And that's actually what you just reported. You're reporting that candidates are less likely to leave their company right now. And that's really the passive candidate. Those are the candidates that recruiters actually target. What's interesting is that in our top resume job seeker index, the active candidates, people actually looking for jobs, that actually sentiment increased. So they're feeling better about their likelihood of finding jobs because the passive candidates, the ones that are actually at companies, are being held on to more closely by those companies to really get that return on investment that was made in hiring them in 22.
You know, this is like a tug of war. On the one hand, we have record low jobless claims. On the other, record high job openings. On the other hand, the Challenger layoff announcements this morning were pretty bad. I mean, the biggest January increase since 2009. We're seeing it spread from tech to retail to finance, real estate, construction. And is small business the key here? That small businesses in general are hiring and retaining, and that is what accounts for this mismatch between the high-profile layoff announcements we're hearing, but the fact that we haven't seen the labor market slow more broadly.
Yeah, you're dead on. The other thing that we saw were more recruiters were actually working on roles in that $40,000 to $80,000 salary band. So you could think of those as the entry level, the mid-management level. And if you're having recruiters work on those roles, it really means that they're really hard to find and to really both source, engage, and get those workers into those companies themselves.
Final comment then on wages. How is this likely to shake out, do you think?
Yeah, so really weird. Again, tug of war. We saw the same number of recruiters report wage increases to the same number that reported no change or a decrease. So really not seeing a high demand on the wage side. I think hiring at all cost, which was sort of the beginning of 22's theme, is really not happening today in those roles themselves.
And the theme I'm gleaning from you is more balance. It's not one of rapid deterioration, but that it sounds more even. And that itself is a slowdown from the past couple of years.
Yeah, definitely. I think there's also going to be a really big push for retention. So if companies are actually trying harder to hold on to their employees by creating greater work-life balances, more culture activities, et cetera, it's really going to be, hopefully, the recruiters, and that's where we really come in, to really go after those passive candidates.
True.
So I think if there was a lot of job mobility in 22, it's slowing up. By the way, every month, according to the JOLT report, we are still above, in the quit rates, above 2019's average.
Right.
So the 2019 average was 3.5 million. You're still above that. We've had over 4 million quits per month. In every month in 22.
Still highly unusual. Points to what sounds like still a decent amount of strength. Evan, thanks so much as always for setting that up for us. We appreciate it.
Thank you. Have a great day.
You too. Evan Sohn, Recruiter.com.